Stocks getting hit in futures. Nasdaq down 3.5%. Got the dollar down alongside them. Bonds are getting bid right now. Gold's off. Bitcoin's getting hit. BTC been trying to firm up a little bit here, back above 100,000. Jim Bianco is with me this morning, president at Bianco Research. Jim, great to have you this morning, sir. Welcome back. We got a sell-off to welcome us back this week. What do you think?
Yeah, I think it's really about, a financial event, not an economic event. It's more about that we have 7 stocks, or 34% of the S&P. They've had sky-high valuations on the idea that they've got these gigantic moats and they could charge these big fat margins or prices that give them big fat margins. And what happened over the weekend is the moat and the margins are in question. So yes, I'm going to give you an hypothetical here. So yes, NVIDIA is a $2 trillion company. Problem is it's a $3.4 trillion company today. And that is a big problem if it's 7% of the S&P and the rest of the Mag 7 companies are going to be impacted by it as well. And the bond market is just doing what the bond market does best. A bunch of algos have just saw that there's been a big decline in the futures and they're reacting accordingly. But I don't think this is an economic event. I don't think it's going to change GDP. It's not going to change what the Fed does. It's not going to change the outlook for inflation, at least not yet.
Does it change any of the leadership dynamics economically or market-wise between the U.S. and China? Because since COVID, it has basically been a one-way train in our favor. Failures of leadership, economic policy, et cetera, from China. Does this change any of that narrative, Jim?
Yeah, it definitely could. I mean, because what China has been able to do with this technology, if nothing else, you could just say, they produced what we already have at a small fraction of the cost. And that's always been the story of what China does, right? They don't necessarily create new things that we haven't seen or push the boundaries. They take what we have and they just make it a lot cheaper. And that's exactly what they've presented with the open source of DeepSeek, is that it's just what we have now, just a whole lot cheaper. And what that means now is the Mag 7 could potentially have hundreds of competitors, because now they can get into the game. You don't need to have billions of dollars and contract with a nuclear plant in order to power this stuff like Microsoft is doing.
Okay, so that's where there is a point to be made. I see the dollar coming off a little bit. You wonder, maybe there's just some eager pairs traders that have been looking for K-Web, looking for some of the China stuff to bounce back. I know a few of our guests have been, because that spread's gotten pretty one-sided. So that's the type of thing that could normalize without breaking anything structurally.
Yeah, I agree. I think there's been a lot of people that have been looking at these companies and being ready to jump on them if they saw any kind of opening on the short side. And again, I'll emphasize what we're talking about here is a financial event, not necessarily an economic event. If you want to talk about the S&P 493 or the Russell 2000 stocks, nothing's changed for them since Friday. But the problem is these 7 stocks, and NVIDIA in particular, drive everybody's returns. Even if you don't own them, even if you're in the bond market, it's driving your returns right now.
Yeah. Okay. So, Jim, the Mag 7 clearly in their indexed weight are going to inflict some pain here this morning on folks. Is the strategy then to sell upside against your long positions in stocks, maybe covered call type stuff? Do you buy volatility? Do you buy gold? Clearly Bitcoin's getting hit. If this does sustain though, what's the risk off answer? If it's not, because if it's an economic event, then we kind of go to recent playbook. We go, okay, sell bonds, all right? That'll work, buy the dollar. That'll work. But if we go through a prolonged sort of AI battle kind of corrective mode, what works there?
I'll answer the question this way. What works is what hasn't worked. And that is that active management, equal weight S&P, basically to de-emphasize in your portfolio the Mag 7, because up until now, what has worked is don't try and pick stocks. Don't try and be smart. Just buy the index, and it's worked, and it's worked, and it's worked. Well, now, if these Mag 7 stocks are in trouble, then blindly throwing a dart at the stock page is going to probably beat the index, because they're going to just drag the index down with them. And then you're going to see a massive rotation away from the Mag 7, And that means a massive rotation out of VU or IVV or SPY or QQQ because they're so heavily weighted in those, and they're going to run towards equal weight or the S&P 493 ETFs or the Russell IWM or the Russell 2000 or something away from them. So that could be, if this is sustained and this is real and their moat and their margins are in trouble, this could really then challenge that whole idea that, active can't be just buy the index and just wait for the rising tide to lift all the boats, because the biggest boat that it had been lifting was the Mag 7.
Yeah, very well said. Okay, so then let's look ahead here, Jim. Some kind of hypotheticals. Stocks down on a Monday that includes inflation data at the end of the week. Fed that might be interesting. Any commentary we get, considering the last thing we heard was hyper dovish from Waller. Economic data throughout the way, durable goods, you know the list. How does that then set us up? I mean, if I'm trading macro, should I be buying the dollar? Should I be taking this bond rally and going, beautiful, sell this on inflation week when it's supposed to pick up?
Yeah, I think, if you're looking at the bond market, you're looking at the dollar, once we get beyond this immediate reaction to what's ever happening in the Mag 7 and however we reprice them, I think you're going to then turn right back and say, the economy's the same as it was last week when yields were above 462, and the dollar is going to be, it should be at the same levels that it was last week. But I think that the big event this week, and this is kind of the conjecture event, is going to be the presser, and maybe even between the announcement and the presser, because the Fed is expected to do nothing on Wednesday. So we all know that, so that's going to be a non-event. We're just going to listen to Powell's words at the presser to see if he gives us any kind of hint. But we're going to keep one eye on X, and we're going to keep one eye on Trump and see whether or not Trump lays into Powell because he did not cut rates as he demanded he do last week. It's funny because Powell has been talking about for years, well, the economy is broadly normalizing. The economy is returning to pre-pandemic levels. And I've pushed back on that it's a different cycle. Well, one thing that might be returning to pre-pandemic levels is Powell doesn't cut rates and Trump rips them on social media. So we're going right back to the 2019 playbook, at least in that respect.
Boy, yeah, can't disagree with that, I feel like, considering what we heard in the last week. Hey, Jim, one more thought on AI situations. We open up the bell here. Going to hear some noise as we kick things off, but I got one more question for you. Futures are up off the lows from overnight. NASDAQ was getting just bludgeoned early this morning, so we have improved somewhat. And Bitcoin's been moving along with it too, still down about 4.5%, but watching that obviously is a sign of risk appetite. Jim, one thing someone texted me this morning I thought was pretty astute was that this is akin to the 2015 oil and energy correction, and that the analog here is we just announced hundreds of billions of dollars of spend in tech, and now you've got a product that potentially undercuts that. So if we just load it up on supply, and now there's going to be less demand for our products because some of it's going to go to this thing, is there an analog to the way, say, oil can crash like energy companies did in 2015? A bunch of those fracking early companies went belly up. What do you think about that analog?
The only issue with that analog is that the companies announced, and the Stargate $500 billion now, it was just an announcement. They haven't done anything. But I'm probably safe in saying that whatever they thought they were going to spend $500 billion on last week is not what they're going to spend it on now going forward, or how they're going to spend it. And they don't have to spend it at this point. Because remember, this is the whole point about what DeepSeek is trying to do, is lower costs. You don't need to spend that much money. I read one comment that DeepSeek took less money to build DeepSeek than what Meta is actually paying some of their engineers to build these things. So that's what's been, so I don't think that spend may necessarily go through as designed, and that we're just going to get this massive overbuild that we don't need. It's going to be adjusted.
Okay. Well said there. I guess this makes earnings coming up for tech even more important, right? If there's not like real juicy numbers with margins, then they're going to look more vulnerable. But it's a good point that, a lot of that Stargate stuff was just talk so far. So.
Right. And I just would say one thing about earnings. It might be a little bit like the Powell presser in that, all right, that was the fourth quarter, but something happened last week. And it's all going to be about the narrative when we get to the discussion with management. What does this mean for you? How are you going to respond to it moving forward? The earnings reports are well timed that it's going to force management to talk about it this week instead of maybe hiding like they probably would like to.
All right. Hey, good stuff. Thanks, Jim Bianco.
Thank you.
Appreciate the thoughts. Nice analysis. President at Bianco Research, Kevin Grange.